Hey, what's going on YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and how to get you access to high limit credit funding. If you're interested in applying for any credit products or open up any bank accounts, whether that's personal or business, we have a ton of referral links in the description of the video. And if you like our content and want to get notifications on all the latest videos that we put out, make sure you hit that subscribe button and definitely leave your comments and feedback. We definitely take a look at all the comments and definitely try to incorporate some of the data points that our subscribers provide on their perspective. So with that being said, let's go into this video. So for today's video, I'm going to be talking about business credit and just sort of explaining what business credit is and dispelling some of the misconceptions about business credit. So business credit is, credit that's extended under the business's name or under the business entity. So with building business credit, you're going to need an EIN and you're going to need to be registered with the Secretary of State, along with a bunch of other, checkbox items that you're going to generally need. Having a valid business address, business email from a domain, not a Gmail, business phone number, being listed with, some of these public directories, 411, Yelp, Google Business, Yahoo, etc. I'm not going to get into all the details of that, but those are some of the prerequisites with building business credit. So over the past 2 years, I would say there's been an uptick in just general interest about business credit. And, there's definitely been a lot of individuals, seeking out business credit and trying to build business credit. Now, I just wanted to explain some of the misconceptions that I see. And, there's a lot of other credit experts, people in the credit space that I think what they were saying as far as, no PG business credit, it was misinterpreted. So, no PG, it's basically when a business can get credit extended to them that's not contingent on the personal credit of the owner or any authorized person of that business. And what I've noticed is that sometimes it's misconstrued as being a substitute for having that personal credit, business credit being the alternative, in which it actually is not. And so there's a preference for the no PG for a couple reasons. The main reason is it was originally intended to separate personal liability from corporate liability or the business liability. So, meaning if your business is unable to repay the debt, then they can't come after your personal assets. So having that separation, but even with that in mind, regardless if you're seeking PG or non-PG, you would never go into a situation thinking that you won't be able to repay that. In my situation, that's never really a concern because, I'm never thinking that I'm not going to be able to repay any credit. So that's one aspect. The second aspect is the idea that business credit is a substitute for having poor personal credit. And so what I see a lot, especially, in the business credit space, is, individuals, building business credit thinking that, because they can't, let's say, get, a business credit card using a personal guarantee, that they can just build business credit instead and then be able to get access to that. But there's only a couple exceptions as far as business credit cards. One is the Sam's Club MasterCard, which a lot of people already know about, where it doesn't matter what your personal credit is. If you have the data points reporting on your business credit report, then you can get you can get approved for those cards. And it doesn't matter what your personal credit is, and you can build that business credit report using no PG vendors to build it up. Now, here's one thing that's been happening, because a lot of people have been doing that, or they'll get the Sam's Club Mastercard, or they'll get Quill, Uline, whatever, get gift cards and things like that, and then basically don't pay that debt off. Just run it up, and because it's no PG, it doesn't have any effect on their personal credit. And what's happened now is that places like Quill, they're making you prepay for gift cards. If it's like your first order, or Sam's Club Mastercard, what they're doing now is they're giving people low limits, when previously you would see limits 10,000 and up. But what we're seeing now is people getting low limits like $2,500 to $1,000, and that's because they're starting to experience more losses, more write-offs on bad loans and things like that, because people are using that information basically to get around having poor credit. So in a sense, it's not a good way for them to really know, just because this person got, 5 or 6 vendors where they may have spent, $50 to $100, it might cost them, $400 to $500 to get that, low risk Experian business credit score, so that they can then go get a $10,000, MasterCard from Sam's Club. And that's what a lot of people have been doing. And unfortunately, what's been happening is, people basically maxing those cards off, and just really, really exploiting it. And so what's happening now is that they're lowering limits, on comparable business credit scores. So that's just one thing too. And then one of the other big misconceptions is, like I was saying, thinking that you can use business credit as a substitute for personal credit, which that's not the case whatsoever. So yeah, you can get vendors and things like that, net 30s, and even you can get revolving accounts too with no PG. But as far as like business credit cards, with the exception of the Sam's Club Mastercard, there's not very many where you're not having to provide your personal credit to get qualified. So the vast majority are going to require a personal guarantee. So meaning, if you do run up that debt and default on it, then they can come after you for personal liability. One of the advantages is that a lot of those business credit cards don't report personal, so you can leverage those limits and use those to grow your business. And that's the real purpose of business credit, is to use that to accelerate your business, being able to get the capital to basically get off the ground. But one of the things that a lot of business credit experts don't share with you is that the most important aspect when it comes to getting loans and lines of credit, and even in some cases business credit cards without a personal guarantee, is business tax returns. And that's probably more important, even I would say, when it comes to business funding. Business tax returns is probably even more critical than even having a good personal credit score. And I'll give you an example. So basically, business tax returns, that's documented, in your document. It's documentation of how much money your business has earned within a given year. Most small business lending, they're going to require 2 years of business tax returns in order to give you an unsecured line of credit or a business loan. Now, you can get business loans based on the activity, the transaction activity of your business. And the reason why business tax returns and business bank accounts, transaction activity, why that opens up, um, you know, lending up business lending opportunities more so than just, your Dun and Bradstreet, your Experian, is because that's actually showing money coming in and out of your business. And with business tax returns, it's really hard to fake that, right? Because you would have had to file with the IRS stating that, you earned this amount of money within this given year, et cetera, right? So you can't really get around that with business, credit reports. Yeah, you can go through the motions. Yeah, get Quill, get Uline, just get these one-off vendor accounts. But that's not enough to convince the banks that you actually have a business that's transacting, that's bringing in revenue, and actually has the ability to repay. So that's one of the biggest misconceptions, is that you're going to be able to get without having any tangible business, be able to get business credit cards, be able to get business loans, lines of credit. Yeah, you can get business credit cards with good personal credit, but then there's situations where, for example, let's say you have an 800 credit score and you try to get an SBA loan for a new business. You're not going to get approved because it's more than just your personal credit score, right? They want to see your business tax returns. They want to see the inflow and outflow of money into your business bank account. They want to see how much cash reserves you have on hand. They want to look at your other expenses to see, okay, if we give you this loan at this interest rate, are your revenues going to be able to support, this additional debt that you have to pay on a monthly basis? They also use the FICO SPSS, which is a composite between, your personal credit score, business credit scores, business revenues, and then also, your personal income as well. So it's really hard to get around when it comes to getting, business loans and business lines of credit. And I just wanted to spell out that misconception because I think what a lot of people were thinking was that, okay, I have jacked up personal credit. I'm just going to go through the motion, get these net 30 vendors, build business credit, and then, get access to $100,000, business loans and lines of credit and business credit cards, which is not the case. And I think a lot of people realize, after, and, I see this in a lot of the credit, Facebook, message boards where, people are, I guess, just getting all of these different vendors to build up the data points, which is absolutely fine and okay. I'm not knocking that, but it's really, what do you do with that, right? Because if you're not using those accounts to grow your business, then it kind of defeats the purpose in a sense, because it's only so far that you can get with a business credit profile, and not actually having, paying customers and transacting with customers and, getting revenue and having business tax returns. If those accounts aren't going to push you in that direction to grow your business so that you're actually bringing in revenue, then it kind of seems a little pointless, because I see a lot where it's just, a business that's kind of just like a shell, right? It's not, there's really no activity, no transactions, no products or services that are actually being provided. It's just really a shell where, yeah, you have these vendors, but you still aren't able to get, business loans and things like that, because there's no activity within the business bank account. There's no business tax returns at the end of the day. I've spoke with a ton of different small business lending, and the prerequisite for a lot of those is, 2 years of business tax returns. Now, once you get to the point where you have documented business tax returns for multiple years, then at that point with certain institutions, you can then get unsecured business credit cards, lines of credit, loans, without necessarily having to provide personal guarantees because you've already demonstrated through your business activities that the business can is sustainable by itself to be able to support those debt loads. So that's just a really important aspect. Focus on actual business because I think sometimes we just get caught up in getting all these vendors and thinking that those vendors are going to unlock bank issued credit. And like I said, in some cases it will. You can get high limit accounts with different vendors. I'm not saying that, but it's just you really want to get, if you really want to get to like SBA and unsecured lines of credit, then you're going to have those business tax returns at the end of the day. And so there are limitations on business credit. Business credit is really to be used. The no PG, vendors and things like that is really to be used to grow your business. Because if you don't take that next step, then you're going to your business is going to be limited to just what vendors you can actually get. And so that's all I wanted to share with this video. If you're interested, have any questions, definitely leave them in the comment section below. And until next time, y'all take it easy, and we'll talk to you soon.